Good morning, Mayor and members of council. I'm Kirk Jones, the city's finance director. I want to begin with the result because everything else I share here flows from it. The finance department has met and exceeded its FY 2027 budget reduction target. We identified almost 667,000 in savings and new revenue against a target of 645,000, a 17% reduction. We came in over 21,800 above target. The true actuals could run even higher still. All public-facing services remain intact. Every core financial function continues, and as I'll explain, we have done more than cut. We have restructured how this department contributes to the general fund. To understand what this proposal requires, council should further understand the kind of department finance is, because we are unlike most departments in the city. Finance delivers only essential, statutory, and legally mandated service. Every program we operate carries a legal, financial, or operational obligation that the city depends on entirely. Every function in this department ties directly to a legal obligation, a revenue stream, or a financial control critical to the city's operations. Let me be specific with some examples. Our sales tax and compliance division collects, generates, and accounts for more than 127 million annually, over 65% of general fund revenues. Protecting that operation sustains the city's revenue. Disruption there costs more than it saves. Banking and treasury functions covering cash management, debt compliance, and investment oversight requires continuous uninterrupted operation in compliance with state and federal law. Payroll must run on schedule every cycle regardless of staffing levels. This division demands precision and on-time delivery. The annual audit is required by state law, and audit timeliness has been a documented challenge for this organization. Any reduction in financial reporting capacity raises the risk of audit findings and delays. This department also ensures that all expenditures and revenues are received, paid, and recorded accurately and on time. Each of these functions requires continuous operation. Disrupt any of them and the consequences compound immediately. That is the environment within which we built this proposal. Council should also understand what a purely traditional approach to these reductions would have looked like, because the math is stark. Labor accounts for over 96% of the finance department's budget. Materials and operating cost, as well as outside services, account for the remaining 4%. Removing materials and operations in order to reach our $645,000 target is not feasible, as there is very little there. All of these dollars come out of people. To meet our target through labor cuts alone, finance would have had to eliminate at least 6 positions from an already understaffed unit. That is about 1/5 of our staff. 6 positions in a department this size and this critical would have compromised payroll operations, audit compliance, tax collection, and treasury functions simultaneously. The city's financial infrastructure would have been at risk, not just the departments. That path was available to us. We chose a better one for the city. Our plan rests on 3 core strategies: managerial position elimination, materials and operating reductions, and innovative revenue capture. The first is the only structural change we are proposing: the elimination of the financial reporting accounting manager position. The financial reporting accounting manager position is currently vacant. This proposal formally eliminates it, producing almost $174,000 in savings. Under this proposal, Deputy Finance Director Charlotte Klein absorbs those responsibilities directly. Here's what that means in practice. The added management responsibilities reduce Charlotte's capacity for higher level finance reporting and strategic work. This removes one management layer from a team where accuracy and timeliness are critical. This is a real operational trade-off, and our intent would be to restore this position when the city's fiscal position allows. We are making this decision deliberately with full awareness of the cost, and we believe it is manageable. In our second strategy, we will right-size the materials and operating budgets across the department, capturing an additional 11,000 in savings. We prepared for this by conducting trend analysis in each account line to reallocate and reduce budget to match usage and projected needs for 2027 and beyond. The remaining strategy goes beyond cuts. It is a set of 3 revenue and cost recovery tactical initiatives that generate new recurring contributions to the general fund and support the city's financial operations. In this tactic, we're expanding our focus on sales tax audits. Greeley's sales tax operations already generate over 127 million annually, as mentioned, a backbone of general fund revenue. This proposal increases the audit revenue budget by 75,000 year over year, reflecting a stronger commitment to compliance and collection. This is revenue already owed to the city that we are becoming more systematic and disciplined about ensuring recovery. Second, we are implementing an expansion of the P-card rebate program through a new administrative policy that requires P-card use for all qualifying purchases under $5,000. Today, a significant share of those transactions flows through check and ACH payments, leaving rebate revenue uncollected. Converting them to P-card transactions captures that revenue for the city, projected at a minimum of 80,000 in recurring annual revenue above our current 200,000 rebate budget. The financial return is the headline, but the operational benefits run deeper. P-cards carry chip and PIN technology, real-time transaction monitoring, and cardholder verification that check and ACH payments simply do not provide. Each transaction records automatically, receipts are captured digitally, and administrators can monitor spending as it happens, flagging irregularities before they compound. In the event of a security concerns, cards can be suspended or canceled instantly, giving the city immediate control that a check or a wire transfer can never offer. Merchant category restrictions and transaction limits enforce compliance with procurement policy at the point of purchase, reducing the audit burden downstream. And unlike checks, which once issued are difficult to recover, P-card transactions carry dispute resolution and zero liability protections that keep city funds recoverable. This policy modernizes how the city spends, protects how it does it, and generates revenue in the process. The final tactic, and probably the most significant, is the full implementation of a grants administrative cost recovery policy. Currently, Greeley absorbs most of the indirect administrative costs of managing city grant programs, leaving every dollar of those costs unrecovered. A 10% indirect cost recovery rate on qualifying grants is consistent with federal guidance and consistent with what peer municipalities are already doing. It brings Greeley in line with standard grants administration's best practices. Conservatively estimated, this generates over 325,000 in annual recurring revenue. This is revenue the city has left on the table for years, covering these administrative costs internally. This policy captures it. Here's what I want council to take away from this proposal. These strategies go beyond reduction. They generate and are self-sustaining. The P-card expansion and the increased audit focus will produce lasting recurring revenue for the general fund that will outlast this budget cycle and improve the city's financial position year after year. The grants cost recovery program will bolster how we service and increase rigor in our sponsored programs. These are permanent structural improvements to how the city collects and retains revenue, sustainable by design. Finance is positioned to operate more efficiently and generate stronger returns for the city in 2027 and beyond. This team found the required cuts and a better way to run the department. We met the target and we exceeded it. We protected every public-facing and internal service structure. We made one honest structural trade-off. with a hopeful path to restore it, and we built a more productive revenue engine. I'm proud of what this team put together under a real constraint, and I'm confident this proposal positions finance and the city well for the years ahead. Thank you for your time. Along with this video, you have also received an executive brief and an accompanying PowerPoint presentation that will walk you through some details in greater depth. I have also included the one-page departmental summary that you received in your budget retreat earlier in the year for your reference. I look forward to discussing this further in our upcoming working session. Thank you.